Welcome back to Let It Grow Investing, everyone. Thank you very much for being here. I'm Jeff. We're going to cover everything that has gone on in the market and locally here on the East Coast of the U.S. In this past week. Man, it's been a rough week. It's been a very tumultuous ride in the market, out of the market. Everything that's going on with these plane crashes that have affected so many lives of so many people close to me from back home in Southern Maryland. So yeah, it's been crazy there, and thoughts and prayers with all the families, all the loved ones of everyone affected. Man, it's been brutal. A lot of people that one was in the neighborhood that I grew up in, was right around the corner. That's where he lived. One, that I went to school with. The wife of one of them that was deceased is someone that I went to school with. It just hits too close to home. Soccer teams that actually we were saw on the court yesterday. They lost the soccer coach. Man, it's rough. So I will be posting a link to help out those families affected in the show notes description. So if you are willing or thinking how can I help out, there are direct links for those families. At least the 7 people that I know from Southern Maryland that were affected. I know there's other ways to help as well. And, you can certainly find those on there as well. Yeah, so we had that, and then we had the Philly crash. Man, it just was a rough week. So, yeah, that is definitely top of mind for me. It has certainly been on my mind a lot this week. But, going forward, getting kind of back to the markets and things that I guess we're all trying to wrap our heads around, right? We had Monday kick off with the Deepseek news, the AI out of China, how much cheaper that was. They said that it was built for around $6 million. And then a lot of caveats came out that didn't have any algorithms, data, any R&D kind of built into those costs. A lot of people saying that the NVIDIA 100 chips had to be used, and those are not available in China due to regulations and trade agreements as to what can be available to China. And then someone basically said, hey, there's always a back door. Fentanyl is illegal, but somehow it still makes its way here. So we can't think that these AI chips are going to be any different when it comes to getting them in the hands of China or whoever, really. So that is kind of all up in the air. But at the end of the day, it's an open source model that is going to be making AI a lot more accessible to a lot of different people. So we don't have the same barrier to entry if it's going to be open source and everyone can use it. So that should change a couple things. NVIDIA, AMD, all the chip makers got just punished on this news. That was on Monday. Then they started rallying back, right? There's a lot of different changes that were going on, trying to figure out what this means, who's going to be affected, and really what pain that is going to bring to those companies. So at first, I looked at this from a number of different ways, but I guess at first I really thought that China is going to be a bad actor, right? Do I necessarily want to, I've never had TikTok, but do I want to get out of TikTok and then add on to my platforms, to my computers, my cell phone, whatever? Do I want to add on a Chinese AI language model? And I don't think that, I know that the government's not going to have it. So everything that's been written here for healthcare, for government, for military use, we're not using it, right? So that doesn't really change there. So even though we're still spending, we might be able to spend less on some of these models for some applications, it is not going to be a widespread thing throughout the government. We're not going to see it. It's not going to be through healthcare. It's not going to be through military. I don't think a lot of big corporations are going to use it. So we still have a lot of strong demand in the chip space. A lot of people saying that the fact that now it's going to be more accessible to more people should actually help the chips, right? There's going to be more people looking to build on the back of Deepseek, their open source AI. Now, smaller companies can build out their AI with this platform, right? So there's a lot of different things going on. I still think it's a net positive for the chip makers, as more and more people are going to be having access. More and more people are going to want chips. So overall, cheaper entry should mean more demand, right? So we'll see ultimately what that means. I still am strongly saying that the AI names, the software names, are going to do very, very well. We've got Palantir coming out this week. I believe AMD is this week reporting earnings. But it was also a massive week for earnings this past week. So yeah, let's take a sip of coffee. We're gonna get back over to what E-Trade has to offer, and I'm gonna try to pull up just what we're looking at here. Let's see if I can go ahead and do that for you. E-Trade, we will share this screen. All right, so this is a little bit of what I did this week. I told you guys I had this covered call on Starbucks. Starbucks actually finally decided to get its act together and they rallied, of course, right? So, Starbucks, just because I've got that pulled up, we're going to go ahead and type in SBUX. We're going to take a look at this one on the week and just see how bad I did here. So, yeah, I had the covered call written at 101. I was kind of looking to get out of this. I'm kind of thinking, yeah, we got a 2.25% dividend, but this has kind of been dead money. If I look at it over the past year, yeah, we rallied here at the end. But yeah, we were down in the 80 range. I think I wrote that covered call probably in the mid 90s. I wrote it at 101, and 100 shares got swept out. So this is pretty much my whole Starbucks position. PE still a little bit rich. They've got a new CEO, and things are starting to turn back around there. Well, I have zero point 0.7 shares left, but that will be sold on Monday when I go in and just have this fractional share from dividends taken out. But yeah, so we've got a lot of different things here. We had some price adjustments on Starbucks, raising that. We had union workers reportedly engaged with mediator for contract talks. So yes, some more union news there. That already might be in high gear. We got a lot of different things, but the CEO that is now there wants to kind of revitalize things and change things up. So things were looking a little bit better for them. The guidance was a bit stronger, and they came out and man, they were up 8 or 9%. So I sold the shares that I was pretty much already willing to sell. Mid 90s, I sold them at 101, and yeah, went up to 107.68. So could I have sold it for more? Sure. I was willing to sell it cheaper though, and the covered call was just a predetermined exit price for me getting out of Starbucks. So now with these Trump tariffs, well, did I even start saying that yet? I got it on my notes, but this is kind of out of order. With Trump tariffs coming back in, we're going to see how bad the market gets hit on Monday. I think there's going to be a lot of fear and uncertainty as to what the tariffs are going to bring. So we will see just how bad of a sell-off we have on Monday. So having this money from Starbucks potentially gives me, some chips to play with when it comes to what the market is going to give us for Monday. So yeah, Starbucks, that one, okay. Sofi, we took a beating there. So my covered calls on Sofi look very safe right now. I wrote those at $20. Wrote 3 contracts for $20, and I forget what it was, $70 a contract. So it was $200 that I made in covered call premiums. So Sofi, man, the Q4 looked really, really strong. Earnings beat and revenue beat, but the guidance going forward was weak. So we missed on the guidance, and that was a big no right now. When you miss on one of those 3 metrics, earnings, revenue, or guidance right now, especially guidance, the market's already at a premium. SoFi's already run so much. Then we had all this AI Deepseek news coming out. Man, SoFi got punished, right? So I think for me, I'm okay with that. If it got over 20, I was willing to sell it. And, with the dropping, could it be a time to buy a little bit more? Maybe. I would probably wait for this thing to go back down a bit more from here. I don't necessarily need to buy more, but I still think it's one of those stocks that you could buy and hold long term. They've got a lot of growth. Things are really going well for them, but just not as well for, the foreseeable future as what Wall Street was hoping for. So that is what brought it down. But, Q4 looked really, really strong. So on all metrics that I've seen. So that is definitely something to be on the watch for with SoFi. Going forward, we had Meta report earnings, and man, Meta blows it out of the water. They had huge growth. Forget the actual revenue growth, but man, I think we did $800 billion in the past quarter. Was that? Or it might have been year over year. But anyhow, the growth there was huge. The margins went up from like 41% to 49%. They reduced their costs on G&A. They brought that back down from in the billions to high hundreds of millions. So they're getting those costs under control. They are definitely increasing their revenue off of advertising, right? Across the board, I think outside of US, it went up about 23%. In the US, it was up about 14%. So the revenue cost from advertising has really grown for Facebook, for Meta. And I think that is going to be a driver going forward. You're still getting the biggest ROI, return on investment, as a business owner being on Meta or being on Instagram as far as how far your ad dollars go. So they still have that pricing power. CapEx is still a concern, but with Deepseek, we are seeing, some of these players potentially having a cheaper way to build out their AI. So I think they said $60 to $65 billion worth of CapEx. And now if that gets revised, there's a good chance that it might come in lighter. So that was a big spend. But if we can find ways to build out AI cheaper, I think a lot of the things that Meta is forecasting might actually go down. So they've got their costs in order. They've got their revenue coming in and growing just, substantially. The EPS, I think we were looking for $6.67, I want to say, and it came in at 802. So yeah, that is massive, right? That is a massive beat to the upside, and that was off of like I want to say a $5.32 base for this past year, the same quarter last year. So I always forget what it is. Refinitiv. Let's go ahead and just show this one. So we'll take a look here. We've got, this is the Meta forms for Refinitiv. So we're looking at this huge growth, 5-year, 228%. I still think that this thing can go up from here because I don't think that a lot of the analyst numbers for the revenue that they have are going to be accurate going forward if Meta keeps outperforming like this. So we've got, let's get down to the revenue here. So this is a bit dated at this point, the price target that is. We've got, what do we got? We've got earnings per share way up. We've got from 1487 up to 2382 on the yearly. Revenue went up huge, right? We're at 164 in 24. And now we're looking at 214 projected out for 2025. So huge revenue there. We've got, I think that might make my numbers from earlier wrong. So excuse my numbers from earlier. I think I said 800 and it might have been 80. I'm sorry. We've got dividend. Yeah, we got a lot of growth that could be had there. There's not much on that dividend. We've talked about that before, but nice to see a dividend there. So right now we're saying forward premium, 25%, trading above where it historically trades. But I don't know that that's going to account for the numbers that Meta has actually been posting up going forward. So yeah, those numbers came in so much hotter than where we actually thought they were going to be. And it's got a lot of these things skewed. But the forward PE, I mean, it's higher, but at a 28 times versus a 22 on forward regularly, I mean, 28 is not that rich for the valuation of what you're getting here. So I still think that this thing could be a buy. I have a feeling that this goes into the mid sevens, maybe 800 by the end of the year, especially if it keeps firing on all cylinders like they are right now. So a lot of good news here from Meta. Yeah, the forward peg is still fairly valued. Let's see what kind of growth they had. Yeah, we got, well, there's no number for 25, but by the end of 26, we're looking at about a 30% gain in revenue. So that is going to continue to grow. Positive earnings all through the last 6 reports. So we've got that there. Yeah, I don't know. I think overall, I still believe that Meta is a strong stock to buy even right now. So that is in the contention for which stock of the 12 that we're looking at. For this year, do I want to go ahead and buy right now? What am I going to buy on Monday? Meta is top of mind right now for me. So we're going to go back and we're going to take a look at Tesla. They reported, and Tesla has got a lot of problems right now. They are doing okay after earnings, surprisingly, but a lot of their numbers came down. We had, maybe not such a great quarter this time last year. And we weren't coming off of a super stellar end of 23 for Tesla. We've got a lot of the EV credits that are going to be expiring coming soon. We've got decline in sales. I believe it was 8% from where we were this time last year. And like I said, that quarter was not that great. We've got EV tax credits going to be ending. We've got an Elon Musk problem where, he might be leaning more Republican right now. A lot of the Democrats were supportive and they wanted to buy Tesla and support Elon or whatever. And now you don't really see the same thing from Republicans, right? So he might have gone to Republican, go woke, go broke. And I mean, that works both ways. So the Republican base might not be the ultimate EV driver. I know quite a few that have a truck and have an EV, right? Maybe they do their daily driving in the electric, and then they need to tow their camper or their boat or whatever. They have a truck for that as well. So, I don't know that they won't do it, but it doesn't seem that they're showing up in droves in order to take advantage of lower costs on EVs right now, and then also getting that EV tax credit. So we will ultimately see what happens there. Energy production has gone up significantly. I believe that was a 30% increase in their energy production. We've still got full self-drive getting built out more. I believe I just saw something saying that after the Teslas are manufactured, they're driving from production to the shipping lanes by themselves, which is pretty cool. I still believe that Tesla full self-drive is the best of anything that I've encountered. I know a lot of people say the GM system and the Cadillacs, the Blue Cruise is pretty nice. I still don't think it's quite where Tesla is at this point. So that's my 2 cents there. But a lot of different concerns there. So we've got GM and Ford that are going to potentially be affected negatively by a lot of these tariffs, right? If we've got to pay 25% to import the vehicles back into the U.S. from Mexico or Canada, there's going to be costs associated with that for the consumer. At the end of the day, that's just how it's going to go. The Trump tariffs, there's a lot of different thoughts there. One, I do think that it can generate a lot of revenue, tax revenue. Could it fully, fund the government? I don't believe that it can. I know that it did 100 years ago, but the government was much smaller. It was only about 2.7% of GDP, and now it's around 25% of GDP. So I don't necessarily think that the tariffs are going to fund the government. I just don't think that it's going to happen. Could it help with income taxes? Could we get some tax breaks as citizens? Potentially. But is it going to replace it? No, I don't think that it will. So we've got that to contend with. We've got 25% Trump tariffs on Mexico and Canada. We're looking at those on, what was it, Tuesday, Wednesday? I forget the exact date. But that is going to be coming. Someone was saying that, maybe we're going to get pushed out to March. And that didn't happen, right? We've got 10% on China. They are going to try to push back on that. I did have an update here on this. I'll try to share this page. I forget to do that all the time. I will share this tab. So where were we? I was reading this one. Trump deals with fallout after imposing tariffs on China, Canada, and Mexico. We've got... latest on Trump tariffs, right? Here we go. Trump signed an executive order issuing tariffs on goods coming into the U.S. from Canada, Mexico, and China. The order implemented a 25% tariff on Mexican and most Canadian goods while imposing 10% tariff on Canadian energy and Chinese goods. Canada and Mexico hit back, threatening retaliatory measures that included tariffs. Canada's retaliatory tariffs would begin Tuesday, the same day that U.S. tariffs on Canadian imports are slated to take effect. Chinese Ministry of Commerce responded by announcing that China would file a lawsuit with the WTO and take necessary countermeasures to firmly safeguard its rights and interests. So, oh boy, this is a tough one. I think there's a lot of different things to take into account here. One, I think that he is playing hardball. I think that these other countries are going to try to take these retaliatory, measures to not get beat over the head. But at the end of the day, I do think that he has a bargaining point. I think he's trying to get more production from American companies back in the U.S., from Ford, from GM, from Apple, right? I think there's a lot of that is true. But saying that the consumer is not going to be punished for this is incorrect on a lot of things, I believe. I know that Trump doesn't necessarily say that. I think further down in this article, it said something along the lines of that. There should be some pain with tariffs here. Where was it? He says, still the president in his post questioned in all capitals, will there be some pain? He then answered his own question, writing, yes, maybe, and maybe not. But we will make America great again, and it will be worth the price that must be paid. Yes, I believe that we do need to pay down our debt. I think that is a problem that needs to be faced head on. I think we have to do that. We have to get that under control, because if the country was run like a business, we'd be out of money a long time ago. So for me, as the business-minded side of me says, yes, we need to pay down this debt. We can't just kind of keep kicking the can down the road. Is there some industries that are going to get hit? Yeah, sure. You look at clothes that are made in China or Bangladesh or Vietnam. I think it was about $150 a worker in Bangladesh gets paid a month for working in clothing factories, right? So that's like 87 cents an hour. We cannot compete with that. Even if they had a 100% tariff on things that are coming from Bangladesh, we still cannot get labor that cheap because we have more regulation, right? We're not going to be able to have that. So we're still going to be paying these, right? If Walmart is getting goods from Bangladesh, say for $5, and now we put in a 10% tax, Walmart's got to pay that tax when they buy the goods from Bangladesh, right? So from $5 to $5.50, and we can't make that here. So it's going to be a case where, someone's going to have to pay for it. Walmart's not simply just going to, buy that for $5, normally sell it for $9 or $10, and just absorb that 50 cent tax or the 10% tariff on these goods, right? So Walmart is going to now charge us 11, right? So yes, we're going to be paying for it if that money in the tariffs comes back to us by not having income tax, or if it's going to pay down our debt or be used responsibly going forward. I'm okay with that. But to say that it's not going to affect the consumer, I think is wrong. Could it be a case where different things are now made in the U.S., whether it's trucks or vehicles, if that's more of the way that we go forward? I think that has a lot of staying power, but I don't know that for a lot of the goods that it's going to be, just kind of, swept under the rug, and people are going to forget about this and no one's going to be paying the money. I think it's going to come from our pockets somewhere at some point on some of these items. So it's either that or, we simply just don't buy as much. So I don't know that that's going to happen either. So as a consumer driven economy, I think that we're going to pay for it. Could we opt to pay or purchase things that are American made? Sure. But are all of these things going to be are they going to be any cheaper if we buy them when they're American made? Probably not. I heard a vacuum cleaner kind of example saying that, if you buy the Chinese made vacuum, it's going to be $150. Walmart's buying it for $100. They're selling it for $150. Now they have a 10% tariff. Their cost goes up to $110. Now they charge us $160, $170 for it. But the American made Hoover is $180 or $190, $200. Or if you want to go with, like a Kirby vacuum, you're spending $1,000 plus. So yes, there's the Dyson vacuums are out there as well, and those are really expensive as well. But there are the cases where, you could get a cheaper product from China. Now you're not going to be able to do that, or you can still do that, but they're going to be more expensive. So a lot of different things to take into account there. I think this is a bargaining chip. I think he's trying to bring people to the table. I don't know that this stays forever, especially on the $4 trillion of things that we import. So I am interested to see what happens there. And I don't know. I don't think that it's going to just be this is what it's going to be forever. I do think it's a bargaining chip and bring people to the table to figure out another way forward. In this talk of Canada should join the U.S. to avoid tariffs. Man, this is just crazy. Trump suggested the tariffs against Canada are moved to entice them to join the U.S. We pay billions of dollars to subsidize Canada. Why? There is no reason. We don't need anything they have. Oh, man. The president added, without this massive subsidy, Canada ceases to exist as a viable country. Harsh but true. Therefore, Canada should become our cherished 51st state. Much lower taxes, far better military protection for the people of Canada, and no tariffs. Oh, boy. I don't think that's going to happen either. But yeah, I guess that's another option. Hey, we succumb to the tariffs and we're just going to be a part of the U.S. now. I don't see it happening. I think that's a pipe dream. I think it's just talk to get the headline. But oh well. Nonetheless, that is what it is. So yeah, what did I do this week? Let's take a look here. We've got a couple different things. I started to tell you guys that I was going to be doing. We did buy AMD for the Let It Grow Investing Challenge, where I am looking at 12 different names for this year: NVIDIA, Tesla, Meta, Amazon, Eli Lilly, LHX, which is L3 Harris, Next Era Energy, CrowdStrike, Costco, Palantir, Bank of America, and AMD. The first one that I did buy for this year was ticker LLY. I do need to share this screen. Sorry, I closed out of it. Let me go ahead and pull up ticker LLY, Eli Lilly. This one had gotten beat down earlier this month. Let's take a look here. So we bought this one at 732, I believe it was. So we bought somewhere in this drop here. And man, that was a nice purchase, guys. So if you guys are following along, we bought this one at 730 and now it's at 811. Congratulations. I think that was a solid play. That is one of the ones that I have been loading up on. Ever since it went above 750 or 760, I stopped buying this thing. I think it could probably retest some of these levels at some point, or at least try to go back down. So I hit the pause button. This is what, a 10% gain in a matter of less than a month, probably 15 days. So I took a pause on this one. And I still think that this thing has a lot of room to grow. Analysts, I think they tend to agree with me still. Let's take a look here. Average price target 998.57, still about a 23% of upside. But I liked it a lot more when it was 33% of upside. So that's when I was buying. So now that low is, at 900, it's still about 11%. So I still think you're comfortable buying this thing. At least that's what my research says. I believe in this one long term. This thing got traded down on some of their news and their guidance, but overall, I still think it is a very strong company going forward. So really has had a nice run here over the past year. Let me see if I can't get back and take a look at just the chart for the year. Let's take a look at this one. We'll go with the 1 year. Let's take a look since some of these GLP-1s came out. Is this 24? There we go. We were at 525 October 3rd of 23. So definitely a nice run. We did get above 900. I think we get back up there, but I just don't know if this pattern here is going to hold, or if we test these 720. We were down to, where was it? 725. Do we retest those numbers before we go forward? We've got almost a triple top here. And I think maybe we retest this before we go up higher. I think that could be a possibility, even if we go back down to 760, 750. I think that could happen. If we don't break these lows at that mid 720, 725 range, I think that is a strong sign that we're going to have a nice leg up going forward. So that's where I'm at on that one. I'm happy to buy that one. AMD got kind of beat down in some of this Deepseek AI news. We had a lot of problems there. It did a good bit better than NVIDIA did. If we look at this past year, it's been rough for AMD. They had a lot of problems. Their chips were not the right type for what a lot of people wanted to build on AI. So NVIDIA was running away with it. I think they dropped, upper teens percentage from the beginning of last year. And then we had all these different things come out with Deepseek and everything else. So now I think we're getting the product mix right. We got to see what happens with China. We got to see what happens with the AI chip bans and regulatory offerings and what everything else kind of brings together. But for me, I think the product mix is right. I think they're getting everything back online. So I think it starts to look a lot more enticing. So I have been buying more of this. Um, it's still a little bit more up in the air with Trump tariffs, with Chinese Deepseek. And I think there's a lot more uncertainty out there. So again, I think Monday is going to be a little rocky. Could be a time to nibble here and there. I don't know that I'm going all in. I think that we're going to have a lot of time here in the next couple months to really get a feel for what the market's going to do and go ahead and buy. So for me, I'm thinking that this VIX is going to go ahead and spike. We've also got AMD earnings on the 4th or the 5th. I got to take a look at that. The VIX is at a 16. We did spike up. This is what on the 1 year. Let's take a look at the last month. We had the VIX up at around 20. VIX up at like 30 is going to be a point where we're starting to see a lot of fear in the market. We're not there yet. On the 3 month, we spiked up to 27. Where was that? That was December 18th. So yeah, we've got that. We've got what was happening on December 18th. I can't even recall exactly what the news was then, but I'm sure it was something to the matter. 6 months. This was back. Where are we here? We were August, right? That is where we had that big spike. That was where it spiked up and everyone was fearful. We've got that. We've got what else did I talk about? UPS, man. UPS was killing us this week. This one. Oh boy, a lot of pain here on UPS. We had talks about how bad the union deals were killing UPS. They are also cutting out Amazon as a customer going forward. They're going to reduce their volumes with Amazon by like 50%. That hurt their guidance a lot. A lot of people running for cover on this one. They wanted to focus on better business that is more profitable for them. Yes, Amazon is a powerhouse, but they're also going to write these contracts in their favor. That's what they do. So yes, UPS was delivering a lot more packages, but they were making, pennies on it rather than the margins that they wanted to make. So they're trying to cut this business to get away from it and to focus on that higher margin business that they can actually make money with. So a lot of people saying this one isn't going anywhere. You're getting a dividend that is going to be fairly high, right? Some people saying that the dividend is not going to be sustainable at this 5.67%. That might be the case. We see some very high. Let me go ahead and share this tab. We see some very high dividend payout ratios when it comes to UPS, and I keep holding my breath, thinking that this thing is going to get better. We got some upgrades. There's about 27% of upside here. This dividend payout ratio. Let's see what this thing brings. We might actually start to see some gains here in UPS and come off of this flat line that we've been on. We had $91.1 billion of revenue. Now we're potentially looking at, if we call a midpoint, maybe we're going to be at like 94, 95 by the end of this year. This skips 2 years. So we're going to see, this 26 number. We don't have a number for 25 over here on revenue. But if we're looking at the dividend, this gets scary, right? We're looking at a 98.6% dividend payout ratio and a 5.7% dividend yield, 2% growth. Nothing to really write home about there. But this is the scary thing, right? We've got 98.6. So I was really hoping that this one could report a solid quarter from the holidays. I really thought that that might be a driver for them. But the contract negotiations with the union, and then this Amazon deal where they're going to be cutting out 50% of the volume from Amazon is really hurting their growth projections in the short term, right? Yes, they want to trade and get into the higher margin business, but that's going to come in time. We're not there yet. So that is part of the story. Can we get there? What kind of pain are we going to have in the meantime? Is this dividend going to get cut? What is going to happen? Still, some people saying, yeah, buy up this dip. It is worth buying. Other people saying, hey, there's going to be more pain in the near term. You've got a year before this Amazon deal expires. Maybe go ahead and hold off and see what kind of story we can get at Q2, Q3 before we go ahead and buy. So I've got this one. I hold this one. I'm going to be watching it close. I'm going to have to see what we want to do here going forward. So yes, we're at a 20% discount on forward PE. There's a lot of reasons why it's at a discount right now. That PEG ratio is scary, right? That is scary. We're paying more than we should for the growth that they are returning. Hopefully that growth can get back, but we're not there yet. So that is a lot of the fear that's out there. So trading cheap, but we're paying a lot for the growth that is coming into the UPS company. So that is that. Did we cover? We covered Sofi, we covered Meta, covered Tesla, we got UPS. I did want to get back to a couple of the things that I was buying this week. You know, if you give me too much time and a little bit of money to play around with an account, it's going to get spent. That's just how it goes. So if I go into my orders, what do we do? Yeah, I did have a limit or a market order on Starbucks. So just go ahead and get rid of that 0.7 shares that I have. So Starbucks, that one got assigned at 101. Told you guys that. I nibbled at Nike. I still think that thing could be purchased. A couple single and two shares here and there. UPS, Next Era, I still believe in buying I think that is a safe company, and I kind of keep buying that. UPS bought some more. Visa, they did report. They had a really solid quarter, but I think I'm just doing a little bit of rebalancing here. That one was getting a little too big. So I sold off 4 shares of Visa, probably to buy some more UPS and Nike, right? Something like that. Verizon bought a little bit. Micron bought a little bit. And I think this was all this past couple days here. So bought some more Verizon. I still think that thing and having the dividend there, I think that is going to be okay. Bought a little bit of Chevron, but sold a little bit of MPC. So kind of rotating into the higher dividend yielder here for Chevron. They're doing more with natural gas. I think that they're going to be the dividend king in the space. And I kind of want to consolidate some of my names. I think I have too many positions, so I'm trying to, I guess saying that, then I go ahead and buy Nike. So that's kind of hypocritical and start a new position there, which whatever. But yeah, got out of Marathon completely. That one is one that I bought in, I believe, 2020, right at the crypto bottom, the COVID bottom. I bought that in the 40s, sold it at 150. So we did okay there. I'm sure I bought more along the way. So it probably wasn't even at 40 some dollars. It was probably more in the $70 range. Nonetheless, that one I did go ahead and sell out of. A lot of these names here, I'm just kind of keep chipping away at them, keep buying them. UPS for the dividend, for the dividend. Verizon for the dividend, Micron just because I think, again, Micron, Eli Lilly, and AMD are the ones that I've been buying heavier. I might have to buy some more Meta after this earnings, though. I still think that company has a lot of room to run left after this quarter, even what they had sold at. So Micron, I think we had where are we at? 26.9 on the PE. We had a bunch of these legal notices here. I know we had something else. We got DRAM still driving a lot of the sales here. 90% bullish on chip ranks. So a lot of different things here to kind of take into consideration when you're looking at the chip stocks right now. A lot of different problems with Deepseek, with Chinese AI, with tariffs. There is just so much going on that we really have to keep an eye on our portfolio. One thing I was talking about with my dad actually was the short for semiconductors, right? This happened. I was thinking about this one on Monday. We were, working on their flip house that they've got going. And I was saying, you could short it. You could short the semis. And he's like, yeah, I don't really know options. I said, well, all you got to do is buy this one, right? SOXS. And that is going to be the bear 3 times leveraged short. So it's essentially buying a stock, right? When the stocks, the short goes up when the underlying semiconductor shares that it owns go down. So it's going to be that inverse relationship here. So again, as this thing, we can look on the 5-day. This thing spiked up on the 5-day. Maybe we can see it better on the month. So this was where it was before. the semiconductors get hit, NVIDIA gets hit, AMD gets hit, and the SOXS goes through the roof, right? They were up 10, 12, 13% that day. So you can simply buy this as a little bit of protection for your shares going the opposite way, but it is kind of playing with fire because it is 3 times leveraged compared to the dollars that it represents. So, if your NVIDIA is 120, it would be like owning 3 shares of NVIDIA in the opposite direction, essentially. So, something you can do, but it does get a little bit tricky. The other thing that you could do if you're trying to do the same thing and go long, you think that semis got too cheap and you wanted to buy them, on this 1 month, you buy it at the dip. You buy it when NVIDIA and all goes down, thinking that this thing is going to rebound, to the upside. So that is certainly something you could do as well. But it's a tricky one. It can burn you. So I wouldn't recommend it unless you have some trading dollars you're willing to just let it burn. So be careful with it and know that it's speculative money, and could potentially put a hurting on your portfolio. But if you're trying to hedge your bets a little bit, it could be a way to offset some of those great gains with having that short position there when things go wrong for your stocks that you're holding. So something to consider. We've got a lot of earnings coming up this week. I will try to keep up to date there. Hopefully everyone is safe out there. Like I said, I will post up those links for those that were affected that I know in Southern Maryland. We'll post that up on the show notes. We talked Deepseek. We didn't really get into too much with the Fed. I know Trump's having a little bit of a spat there with Powell, basically saying that this is their fault. They need to get Treasury yields under control, bring these rates down, which I think is it's what everyone wants, but I don't know that we're going to get there without more inflation. So there is that to contend with. We've got, we talked about tariffs. We talked about, everything with Canada and Mexico, China. I think we kind of outlined what that means, and the fact that the consumer will end up paying more. Yes, I do think that it can be beneficial. It can be a bargaining chip, but if we're just going to be throwing tariffs back and forth, it kind of gets into a zero-sum game. And with some countries, that is. With Canada, I don't know that we really have to have anything that Canada is making. And I think we could probably do it here for about the same amount of money if they can do it in Canada. But we talked about some earnings. We got more earnings on tap. We need to be watching for what Palantir does this week. That is going to be huge. I think it could be a make or break time for Palantir. I think we got to have some 40% revenue growth to really see this thing take off. It's had a pretty wild swings from this past month, right? We had that report come out and sent this thing down to 65 from 79, and then we are back up to 82.5. So big changes coming up from Palantir. We'll get those tomorrow. Real quick, I did want to look at AMD. Are those on the 4th or the 5th? I forget what day they report. They are going to be on the 4th. So AMD analysts upside, we've got 40%. Palantir, I'm guessing we're down about 30%. We will see what happens there at 37%. So yeah, I guess I did not cover, or I kind of started to. We are buying Meta. I'm buying Meta. That's what we're going to do. I think that thing has the most growth potential. I think that this 753, I think that is a low ball. I don't think we're getting back to 610. That's got to be older. Some of these new ones, new price targets have got to be higher after the quarter that they reported. So 750, I think we can do that easily. I think we could probably get closer to 8. I'm comfortable buying that. It's got a lot of staying power. I think that the 8 from Raymond James, Susquehanna, BMO at 610. I don't know what they're reading out of that report, but I'm not seeing that. Unless the whole economy tanks, which I don't know that that's going to happen. But I'm thinking that we're going to see some more gains here from Meta. So that is going to be the one that I'm buying this week. Let me know what you guys think about the episode. Let me know if there's any stocks that you want me to cover. earnings that you're really curious about, and we'll talk a little bit more next time. So thank you guys for stopping by, and I will see you next Monday. Take care.